So the highlight for today is we open up and go straight up, and it had that, it wasn't like a violent rally, but it had a point where the only retracements were shallow. See it come in here, come into our PWAPs, our green red position weighted average price. No coincidence. It bottoms out there, continues higher. There was never a bullish to bearish moment, which is something that you need to be aware of kind of on a medium term basis until we plow through important lines in the sand, which are green, red PWAPs. It's important to have good pivotal moments, not moments, but lines in the sand, you could call them, where the market probably has more people long and scared than short and scared. Price discovery is all about imbalance finding balance. If you don't have imbalance, you ain't going to move. Price discovery is turning imbalance into balance. Imbalance of what? Buyers and sellers. What creates buyers and sellers? Open positions. If you're open long, you're a seller. If you're open short, you're a buyer. If you have more longs nervous, you have more sellers nervous, you have more sellers nervous, the price of anything will probably go down. So this was that moment, B2B, we call it, where it did change direction. And you could assess that up here. Oops, I skipped it back. You could assess it up there instead of after it broke 10 or 15 points. Then what does it do? Good support and a good resistance. And it gives you, there is no, you see the market keep banging up against these as a ceiling now, if I back it up. It's not arbitrary when we talk about good lines in the sand. But, and you see like what might be a lot of triangles, but we put them up there to see if there's a pattern or a line within the chart that shows where sellers or buyers are trying to defend. And then the number above or below the triangle shows what the imbalance is. For me, if you wanted to filter out, not have as many triangles, you could self-filter and just look at ones that are over 300. But the ones that are over 250, which creates more of them, obviously, gives you a sense of if there is an area or line that the market, might be showing that this is a price buyers are willing to come in to defend. And then, oops, they're not any longer there. And then you could reject them and head down or head up if it's sell imbalances that are rejected. And so B2B, bullish to bearish or bearish to bullish. And don't put yourself in a position to be so angry you missed a move that's why you're going to trade next. Always think to yourself, after you miss a trade, and you missed a trade for whatever reason, ask yourself, if I would have caught the trade I just missed, would I be looking to trade this next one? And if the answer is no, then why are you looking to trade the next one? I've said this a lot just recently. You have to trade yourself as much as you trade the market.